In today's video, traders, we're going to be talking about what currency pair or market should you be trading for your particular strategy. Today what we're going to do is we're going to break down some of the pros and cons of some of the major markets such as gold, oil, that sort of thing, some of the currency pairs as well, to talk a little bit about the personality of each one. When I'm talking about a different chart, I kind of look at each specific relationship between different currencies and gold and that sort of thing as kind of a unique personality to that market. For example, EURUSD may trade very different than Aussie dollar or gold or oil, right? So each one of these personality. And at the end of the day, what I would say is that whatever you decide to do, make your own trading decisions, of course, but go do the research, go test out your concepts to see, is the market that I'm looking at a proper place to be trading a particular strategy? Sometimes a strategy can work very well in one market, but then not do so well in another. So it's important to kind of weigh this in and do this in your back testing. A lot of traders are just looking for the easy answer, and you're not going to get it in this video. You're not going to get an easy answer that's like, you should only trade Aussie dollar, because that's not necessarily the full answer. The full answer is that different markets have different personalities, and you'll have to do the research yourself to find out exactly which one fits your particular strategy best. For example, if you're trading a trend style market, that might be a good example to look at gold. Gold is one of those things where it trends very, very nicely, at least it has in the last several years. Take a look at the way this market moves for the most part. You can see that it's very, very trendy and usually respects the overall dominant trend. Even when we're in a downtrend here, you can see a relatively clean trend. Then we have a clean uptrend here, starting a clean trend here. And so understanding that gold tends to trend very strongly can be an important thing to consider in your own strategy. When writing a strategy, I've got my strategy over there behind me on the bookshelf. I like to even pick out which particular markets I'm going to be using for that strategy after I've taken the time to back test it. For example, if I'm trading a reversal strategy, I may want to try and avoid trading gold, because look at some of these very long, strong trends on something like gold. And there's other markets that do this. Another one that comes to mind is the pound. Another one is oil. And that's kind of the behavior of those particular markets at the time of making this video. I see that they're tending to trend. Now that can change, and that's another thing we'll talk about, is in the future, these might change, right? Gold might become more of a reversal market in the future, although historically it's been very, very trendy. So for example, if we back out here and take a look at gold, you can see that we've got lots of clean trends. You can see the way this market kind of ebbs and flows with very strong trends, right? So we have a big impulsive move, we have a little bit of correction, but the trend continues. And then when we start to trend to the other side, we get some nice continuation there as well. And then you can see we started trending up again and we had a clean uptrend. So you kind of have these series of clean trends. You can see the market is relatively, trendy. And that's one thing to consider. So if you're trying to trade reversals, if you're trying to buy this market and reversal all the time and then sell it on the way up, it can be a very dangerous game, because this market is, historically very trendy. So that might be why, if you're struggling to create some sort of consistency in your strategies, well, maybe you're not trading the market that fits what you're trying to do. So if you're trying to trade reversals, one market that I really like for trading reversals, historically, this pair has been very, very good for me. It is USDCHF. This is dollar Swiss. And this pair has been fantastic for some of my reversal-based trading strategies, meaning that I'm looking to buy low, sell high, that sort of thing, right? I'm trying to trade the back and forth choppiness of a market. Well, dollar Swiss, take a look at it. It really hasn't moved in the last several years. We've seen this market, for the most part, just kind of move sideways. And so if you're a range trader, this could be a great market to at least consider in your own trading analysis. I know for me, this is one of my favorite pairs to trade, dollar Swiss. The other one that I really like for this sort of concept is EURUSD. You can see in the last several years, take a look at how choppy this market environment has been. Have we trended to the downside? Yes, but it's been a slow, choppy trend to the downside. And if you're a reversal trader like me, I have some strategies that trade reversals. This has been a beautiful market to trade the back and forth movements of. Another one that comes to mind is Aussie dollar. Aussie dollar also been relatively choppy, and similar to EURUSD, we've seen kind of this downward choppy market environment that's been respecting a long-term trend. Understanding how different markets behave is very, very important. Another thing to consider is that different markets respond differently to different fundamental sides of things. So dollar Canadian is an example here. Dollar Canadian is interesting because The Canadian dollar is traded a lot of ways similar to how oil would trade. Because the Canadian economy is built so much on oil, it tends to trade similar to how oil might be trading. So watching what's happening in the oil markets in terms of fundamentals or even technicals might have something to do with US dollar Canadian. So considering that in your own analysis is very, very important. So when we're talking about dollar Canadian is an interesting pair because this one historically, at least from the way I've looked at it, it trends sometimes and then it ranges sometimes. And that's kind of all markets. All markets go through times of trending, through times of consolidation. But dollar Canadian is uniquely interesting because you can see there's been times like this where there's been just clean trends, uptrend, clean downtrend, and then we immediately went into a time of choppiness. So this is where you have to be careful because sometimes people will say, oh, well, dollar Canadian is a trending market based off of right here. Well, you can see that actually changed going forward. We had a very choppy market in dollar Canadian going forward. So these market conditions can change. So it's important that when you're doing your analysis on this sort of stuff, that you're being open-minded, that you're willing to adapt with markets as they change. That's one thing that, I've taken time to learn myself and it took me a long time to learn, is that adapting with the volatility or the trendiness or the choppiness of a market is really, really key to seeing that a strategy works. Something as simple as we'll add a Bollinger Band here. If we added a Bollinger Band here on the strategy or on the chart, you can see in a choppy market environment, something like a Bollinger Band might work out very, very nicely. The lows being held very nicely and the tops being held very nicely. But in a trending environment, this is of course going to be kind of a rough ride, right? You can see that this low did not hold, and in fact we saw the continuation very, very long against this Bollinger Band. So it is important that whatever you do, you consider the market environment that you're in. If you want to trade trend trading strategies, my preference would be to stick to markets that have been very, very trendy lately and continue to ride that potential continuation of those trends. On the contrary, if you're trading reversals, maybe you stick to patterns and concepts that are working well on choppy pairs, back and forth pairs, and then you adapt if things start to change. That's the importance of being a trader that can adapt well, is understanding that there is no perfect pair. There's no one pair that's just the best one to trade. Sometimes people say they love to trade gold and they only trade gold. Well, if that works for you, then by all means continue to trade gold. But if you are trying to trade a different strategy on gold and it's not working very well, maybe you switch markets, take a look at some other things. One thing to also just consider, of course, about talking about gold is that it is extremely volatile and that it moves a ton. So you have to be very careful that your position sizes are according to your risk management plan, and that you have a plan in general. Whatever you do, guys, I encourage you to at least take a look into the idea of building yourself a trading plan. I've got a video that you can check out here about trading with a trading plan and how you can build your own. Check that out. We'll see you guys next time.